higher, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same. Let's go right into the charts without wasting a single second of your time. Here we go, bada bing, bada boom, into the charts we go. So, as we see here, we previously dropped below the 618 of this diagonal pitch fib level, and we still haven't put in a lower low, but we have put in a lower high. So are we going to continue to the downside here? Well, we are stochastically fatigued on many time frames. What does that mean? We'll get into it later when we get into our indicators, but as of this moment we are holding we wicked off of the 786 of the bearish trend based fib extension level that we've had up for over a week now, talking about the intention to go knock out these 41 days of long liquidity. Unfortunately, I did not take this short setup. I was not feeling it on the weekend low liquidity time, so I just kind of sat on the sidelines and watched it occur. But on lighter news, I am doing the funded stuff later in the Discord if you guys are interested to come hop on in for that live analysis for the NASDAQ. Anyway, let's go into the liquidity heat map and liquidation levels from high block. What does this mean? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, and the market maker repossesses their money. So let's see who got repossessed and burnt to a crisp today, shall we? So it looks like Father Time has lost us a lot of these long bubbles to the left here, but we did see them before and they did get gobbled up here. So
Fatality.
As they got burnt to a crisp to the downside. But as we were saying yesterday, that these short pools were starting to stack up quite nicely now. So you're seeing 282 million, which got gobbled up without hesitation before dropping more to the downside. But you're opening up more short liquidity, 111 versus the 48 million in longs. You got about double in shorts opening up here as we drop down here, so it makes sense that we are retracing into some of this short liquidity. 154 million up here at 27.9. If you go above that at 28.2, you got that $282 million band. Granted, you got a stacked band down here that could be taken, and these 100Xs that are opening up as we break out, they could come back to refuel off those guys at any moment. However, as it stands right now, you are imbalanced to shorts by $11 billion on this one minute time frame, which is 6 days of data. So let's go to the higher time frame to expand our vision of the external liquidity pool. Shout out to everyone here. By the way, high block capital costs a pretty penny per month, about $70 a month, so consider subscribing and hitting that like button so you can get this free analysis of the liquidity pools and more without a dime to pay. So let's go to the 7-day time frame, shall we? 7-day time frame previously saw this pool. We saw this imbalance to the downside, about $30 billion gobbled up here in this liquidity, and it starts to taper here, which is why we are starting to induce more into the charts or pause and retrace back into these liquidity on the higher time frame. So let's go to the monthly and see what exists above and below. So we talked about the monthly time frame having this 31.2 region of stacked liquidity in double digits up here. So did they spawn enough divergence by eating into the longs here to justify a inverted Bart Simpson back up here, or some sort of retrace attack to this upper band of pool, or are they going to continue lower into these double digits below? As it stands with the current price action equidistant from where we're at, you do see a pretty penny of 50 billion plus down here at 26.4. Sorry, turning on my air conditioner. So this is the monthly time frame, but the imbalance is clearly to the upside on this time frame. Are we going to go there? You have to juxtapose higher, so we expand our vision to that higher pool on the 3-month. We're trying to get faster at this so we can not waste a second more of your time. If you want to go back and play these levels, you can replay them at your leisure. We're not going to take much time. We want to get warmed up and in the zone for the NASDAQ futures. So that's where the true money is as of this moment. So as we go to the 3-month time frame, that's where we got the idea for the bearish projection. So we're seeing that this pool down at 25.4, you got $100 billion down here. Are we just pausing and retracing before we continue down into this hot band of liquidity here, or are we going to ignore the lack of liquidity in this zone to head up to the 30,000 region for that 40 billion up here? As it stands currently, if you look where we're at, it just is a hop, skip, and a jump down at 26.8 to $43 billion. So that narrative to go to 25K is awfully close to where we are. So you got 43 billion at 28.68, 30 billion at 26.6, 43 billion at 26.4, 38 billion at 26.2, 33 billion at 26 even, 39 billion 25.8, 52 billion 25.6, 51 billion 25.4, 50 billion 25.2, and starts to taper 27 billion at 25K. Are we going to eat some of this liquidity, or did we have our fill here? It's ultra interesting that we did spawn divergence off that 37 billion here and decided to go up at that point without going into this previously. Is there some sort of narrative to not hitting these guys out? Is this kind of untouchable money to the liquidity providers and institutions that drive Bitcoin's price? I have no idea. will we see this attack to the 34K region. We are starting to see that narrative of that pool start to form. We've been talking about that for weeks now. So is that going to spawn divergence to see another Silicon Valley Bank explosion to the upside? Let's go a little bit higher. Could you show me how you drew the fan fib on BTC? Sure can. Sure can. So I was always into shift pitch. There's pitchforks and shift pitchforks. So trend-based pitchforks, I was always into these kind of pitchforks and trying to trap price in these channels that they trade within. I like channels more than trend lines. So you look at these rise and retrace, the impulse and the retrace idea, and it starts to give you this projection. This is the shift pitch. We're going to give you a series of them. So you have the pitchfork and the shift pitchfork. I think the shift pitchfork, it's been a while since I studied this, but one has to do with like downtrends and one has to do with just in general, but it'll trap price in these kind of regions, and you try to find these mean reversion paths where we get rejected off of these kind of fib lines. But then I started getting into pitch fans, which are where is that? Here we go. A pitch fan is located here on your fib tools, underneath fib circles. You can favorite that, and you do 3 clicks. It's literally like my trend-based fib idea. So the trend-based fib idea is the impulse retrace idea. So you use this impulse retrace to create a diagonal mean reversion path using the pitch fan idea. So you could basically play around with it. One place to start would be pitch fans by DGT. Start here, use the deviation of 6 and 11 and play with the deviation and depth, and it will auto draw it for you. And these are the settings. You can go back and pause at this point and replay and take my values here for the 0.5, 618 and the colors, and I have solid and dotted lines, the dotted lines for the institutional levels. And what it will do is it should auto draw that. And so it auto drew that at a different, and then I have 2 of them, some at different deviations. You know, and I try to play with different time frames to try to get the ones that look genuine or whatever. And I'm not really seeing it on this. There was a time where there's this one deviation that I had was playing like fire, and I used it to trade from 706 to 706. So this pitch fan, whoa, it's trying to load too much. So the pitch fan by DGT will auto draw that for you, and then after you get a certain level with it of seeing where it likes to draw from the deviations and where they match up, then you try to find those deviations yourself. So here is the pitch fan. So you'd go like from some impulse and then go down to some level, like down to here, and then it creates a mean reversion thing. So this is not necessarily a good one. I don't know if it is. It might be a new one. I don't know if we're heading all the way up to here or something. And then basically you just play around with the retrace ideas here. So I just happened to catch this back in January and have had it in this one for a while when we were back here in this path. And I was saying, okay, so if we flip the mean, like this mean reversion idea, this is 0, and then you're heading up at 236. Let me see the values again really quick. I think it's 236, 786, I don't know, 382. That's what it is. It's a set. If it will open, right? It's not, my right click's not working. When it lags or the internet connection is terrible, it doesn't let me right click on these for whatever reason. I'm clicking my right click on my mouse. There we go. And so the 236 is the line off of the 0 level. The median, the mean reversion, is the center is the red at 0. And so that's you reverting to the mean. And then 236 on either side 382 after that in white, the 0.5 and the 618, the golden pocket in gold, and then the 65706 outskirts institutional accumulation distribution levels, 786 outskirts for short squeeze or long squeeze, and then 886 retracement. So I added the 886 recently as we were reaching these outskirts here, but they tend to be these rejection points and reaccumulation zones. So we basically got to that 706 here and went just above it and then started to dump down. And yeah, it's just interesting to note how we respect these diagonal fibs, and that's when price trades in this ascending channel way. Generally it's respecting some of these things. So it's quite fascinating. I don't necessarily have the end all be all with this particular one, I just seen it captured in here, so it's kind of interesting to note. And if we come back to that mean reversion, it would take us all the way back to 19K and take us back to 0 and negate all of this premium status. And so yeah, that's how you do the pitch fan. So going back to the heat map, hopefully that made sense. Going back to the heat map, let's see, a quarterly 2692, a quarterly low would potentially become the level to catch the CDW. What is your opinion? What are you looking at to take the long scalp from? Yeah, well, I'll get into that in a minute. Good point, by the way. So first of all, yeah, like the divergence started to spawn here off. So the last time we were talking about longing and longed was around here. We were talking about the $38 billion that was taken on a certain time frame here. I believe it was the monthly. Let's go to the monthly and find that. It might be gone by then because it was a couple months ago. I have a limited time to do. Yeah, it might be. It might be lost to the annals of history. Let's go to the 3 month. Yeah, it is kind of lost there, but here we go. No, that wasn't it. I think it was here. Yeah, there was one where it was 37 billion. I think that was on a monthly time frame, if I'm not mistaken, but it's gone now. So either way, that pool was cleared and it spawned some divergence. So we were looking for divergence either way when you find this. And that's what the chickens drinking water is divergence. So you'd look for a divergence, like if this comes up only to stab down into here more, you'd be looking for money flow divergence, and then that would be off of a pool like as rich as this, or even into some of these, you'd start to see some divergence out of it. So, and then that would be your smooth entry. I mean, even now it could be just enough, like you never know where the divergence is. We're going to get into that in a minute. Right now we're just going over the levels, so just bear with us in our pattern that we normally do. We do this first. So as we see down here at 22.5, there is 94 billion down here, and the entire path caked up with double digits above $50 billion. So that is a nice path down to 22.5 if we were so inclined to come down to it. There's an imbalance here on the 6 month to that region, and the happy campers sub 19K haven't really changed in their values in a while, increasing actually, and so those campers could be taken out as well. As we go to the yearly time frame, the value for the Z denomination increases, so it turns to aquamarine because yellow equals 200 billion, so you're around the 100 billion mark, and it starts to get even Steven, and you start to see that path to the upside being paved to 34.8 with 103 billion up there, and the entire path starting from 30,400. So are they going to eventually come back up to this? The narrative is there for sure. And if you look down below, we also have that narrative of double digits. Even Steven up some over 100 billion down there at 22.4 and beyond. So as it stands right now, I like to look at the monthly and 3 month. So let's go back to those. So the monthly does have this pool up here asking to be taken, and the imbalance could be taking down to here first. So let's go into the charts to see where some levels might occur. Let's go into the regular Binance chart where we have all our fibs on. All right. So we previously talked about the 236 and breaking. If you break this 236 bullish level, then you can expect to drop down to these regions on the bearish trend-based fib line, which we did. So we came down to the 786 of that level, and it looks like we're playing with the idea of some bounce here. Once again, when you start to have a bounce, you normally have some sort of double bottom out of there, and you create Wendy's. So you always have a McDonald's and Wendy's, and these double tops and double bottoms it's just McDonald's and Wendy's for days. So once you start to see these rising wedge type things, you'd expect the second leg down. And how far down is it? A deep W? Is it a shallow W? Here is where the art, if you will, starts to occur, because is it going to come down lower and then spawn the divergence, or is it going to just start here and induce a bunch of shorts and just rip it up? So that is the question that we're trying to figure out here. So we will throw on our indicators, which is Momentum Master. So let's throw that on now and turn on our heads up display. Boom. And go to the link in the description, momentummaster.info, for more. And you can basically read about each component in its glory and toggle them as your leisure. Scroll down to features, toggle them on, see it in its glory, or look at each individual component as they stand in prominence. This is the local bottom of Bitcoin, which I didn't know at the time as I made this. Over 30 hours toiling in Illustrator, tracing price action and the indicator. So, looking at this now, we are starting to see the scoop, the ice cream scoop of price on the 4 hour, which is looking like you could see some sort of play to the upside here. We outlined some pools yesterday, those still hold true. Basically on the 1 minute time frame, these bubbles, they like to come back to the 100x. I always tell you the 28k here, this 280, oh wait, they took this guy out. So actually there's another 100x pool up here at 28.4, and I think we marked that off in our charts, 194 million up here, and this looks stacked with more liquidity too from this drop down. So coming up to that 28.4 region is not out of the realm of possibility here, as you have all of these big shorts opening up to the opposition of longs here, which is sparse and scared for the most part. So let's go to the daily time frame. We're going to look at how the weekly closed. We didn't really focus on how the weekly momentum shifted, so let's do that today. We did get a baseline cross down, which we were talking about the idea of flirting with when we were back here. So the weekly candle close set that into motion to be a reality, and now we are closing down on the weekly time frame. The previous time we did that was back here in May, and we did see some downside ensue from that, and right around here, and it continued. And cross up events do play out as well. So you have cross down, continue, cross up, continue. So with this cross down now confirmed on the 5-day, 3-day, weekly, and I'm guessing the daily now, we could be seeing more downside in store based off of this leading moving average known as the baseline. It's the first sign of reversal, so you look for these reversals on these different time frames, which cascade sometimes downward from these upper time frames. So it started though on the 6 hour we were looking at here. We'll go back to the higher time frame in a minute, but we'll just show you where the 6 hour was giving us that leading juice back here. We were saying this could play out, and now we're seeing this 6 hour dump. Previously we had seen that here, and then when it surged up we were saying hold on to the short, because if it closes beneath the baseline we're still good, and we did come down. So these baselines do give you that leading sauce to the move before it happens. So are we starting to see this scoop up of price? When the baselines get beneath the price, you see the inverse of a dump occur. So this kind of scooping up of the price action by the baselines is why we put the candle's opacity down and turn these baselines opacity up. So this cloud, let's go to the We'll go back, work our way down from the 22 hour now. I think we skipped the daily too, so let's go back to the daily actually before we go to the 22. Sorry, I rode my bicycle back home in a rush, so I'm kind of like all over the place right now. Not as on point. It's first day back to work after the vacation where my mother came to Japan. So you're still seeing this cloud hold true even though we broke beneath it. Are we going to come back and bearishly retest the cloud and start to see this cloud shift down? The cloud is still holding, so there is still some players supporting this idea here. Or are we going to come down to the bottom of the Keltner channel, which is this projection to the downside? If we look at the baselines, we still have more potential room to come down on the daily, but the daily does whatever it wants. If it wants to curve here at 18, it can do that and come up as it did here and never saw more downside even as it reset. So it's really up to that, but you did have a previously cross down on the MACD, leading MACD formula here. So that cross down is going to take some time to curve up here on the daily. You have a potential M formation double top wanting to come back down and go into the green here on the daily time frame. We already talked about how the 3-day and the 5-day had that cross down before this, and you have that alarming situation on the 3-day after the cross down event back here, and the base there, the price is staying well beneath these baselines, so this could continue further down. You have 11 hours for this 3-day to close, so it needs to do something spectacular, or it's just going to continue curving this out and resetting the stochastic. It may want to reset a little bit red to give this a full reset too. That could be the case. So we're going to go back to the 22 now. 22 hour getting reset. We like to see these resets in the unsyncopated rhythm of the 22 hour. When you get these resets, they give you these spectacular moves in either direction. So we're getting that reset nicely now, and the green is starting to come down here on the Williams, but you really want to see it come down lower and do a double bottom situation with the rising sun out of here. So you would be expecting something like, once again, to come down and then go up. So that would give you time to reset this a little bit more, ideally speaking. So seeing the scooping of the price on the 22 as well, it has room to come down to do that here. So it would come down like that. So this would put you at like Thursday or something like that. So you want to see something similar to what happened back here in April 24th. On the 22 hour time frame. And so you still have some room for some inducement and knockout on both sides. Let's go to the 12 hour. 12 hour baseline still has room to come down, similar to here. It needs to scoop it up. I mean, these patterns you see all the time. It goes above the baseline, comes down, goes beneath the baseline, goes up. This is why these are leading. They kind of express the fatigue first and foremost. So you start to see it scooping beneath the price before it goes up. So you want to see it scoop and the price hold beneath it. So right now we're not at that level just yet. So you want to see this come down on all those time frames, ideally in alignment for that surge to the upside. So we're not quite there yet. So you wanted my levels. My levels are momentum based as well as these fib level based. So I go with the confluence on confluence with the momentum in my favor, and not really seeing the momentum in my favor just yet. The interesting thing to note that I've constantly baffled my mind, which caused me to take pause in entering the short, was this 12-hour cloud turning. So we see this turn in the cloud, which is expressing volume entering in a bullish manner, yet we're coming down and broke through it. So normally you would see this become purple, continually purple, and stay purple. So what is this about? This was the thing that had me interested in what was happening here, because we saw that on the 22 as well, I believe. Yeah, so you're seeing the shift of the cloud, and previously we had held that and shot up, so this was giving me pause as to what this is about exactly. Could be these scam liquidity grabs to both sides, messing with the math, I don't know. You are seeing a more accurate depiction of the cloud here on the 6 hour, which is when you dump, you bearishly retest, dump down, and then this continues down in purple. So this cloud is mighty thick to suggest something coming up to here. We would likely come up to a certain pool on the 1 minute time frame here, like up to let's just say 27.96, and then pause there, and then kind of come down a little bit, and then maybe go higher up to 28.5 ish, 28.29. 28.29 is definitely a high possibility because it's 50x. So the 28.29 level, 28.29, let's just put that out there with a bubble here. 28.29, 28.29. Let's just put it there like that, and then we'll put a little arrow for like a little liquidity guy somewhere. Also coincides with this fair value gap. We were talking about a fair value gap over here. So coming up and then coming down again in some fashion, looking at a bearish rejection at some point. So the 6 hour is also reset. But the 4 hour curving in this manner, like you could get a 4 hour play here. The money flow is beneath the, so for in terms of a 4 hour, the 4 hour looks beautiful, like right in this pattern here. This is very similar to this. You have the stochastic low, the Williams low, curving in such a manner. You're getting the domain of you're getting the MACD into the Williams domain. You got the money flow beneath the RSI, so the money flow could come up to this. So you could see this kind of 4 hour play up to a certain region here, from what I'm seeing. It's acting jittery though as to what it wants to actually do. Hold on, let me just move this over here. And it was 29.92 or 28.92. Sorry about that. 28.92. Let's just do 9.0 even. So there's like some this region with this fair value gap and this void and this void. These pools here do seem like it'd be an interesting level to watch. We are seeing some volume enter on this PVSRA strategy on the hourly time frame for that double top idea as we pierce the cloud. So what do we like to see? So we like to see it pierce the cloud. This is like a shoulder, head, and then it comes back down for the shoulder. So what you're going to see is most likely based off this is you see some sort of piercing of the cloud, potential attack to the ATR trend here to stop out some ATR stop loss traders, and then maybe come back into here to go up to there, creating a shoulder head and a shoulder out to here, and then maybe fade back down for this larger double bottom idea. If we go back up to that region, something like that, and then do you spawn lower divergence? I don't know, but yeah, this would just be a leg up to a certain region to come back down again, in my guesstimates. Okay, so what you would see on the hourly time frame here is basically you're getting overbought, so you're going to go up to a certain point and chill out and see how much of that stochastic juice you give back. Money flow and the RSI are staying strong together, which is good to see. If we go to the 15 minute, so we got about 9 more minutes. So we're getting overbought on the 15 and the Williams here. Could you see a pinning of that for that attempt to attack the cloud and go a little bit higher up to this adaptive moving average here and come back down again? Could be possible. The MACD is now moving up into the stochastic territory. Is it going to try to double top the stochastic on the 15 here. Not really seeing so much interest come in. The volume entering is very thin, so you're not seeing these thick bands like you were back here. So these thick bands are thinning out, like this one, which is showing weakness. So if you have these thinned out bands, you're not really seeing so much interest in longing, although looks can be deceiving because the ones who are injecting the price are the market makers, so they're just trying to play liquidity grab games. So you're trying to see how many bubbles open up on each side and where the imbalance occurs. So chances are we go into the London close with a stop hunt rise and then maybe drop down to consolidate leading into Wednesday for a continuation idea potential to these retrace into these pools, and then Thursday midweek reversal we see more downside from wherever we decide to be satisfied with eating back into on these shorts. 2869 194 million in 50x shorts, so that pool is also juicy to eat. 50x people they don't like to leave on the table too. So these 50x and 100x guys are the guys you want to look at in terms of people. They didn't even give that 282 million 100xers a chance. They just came like nope and then continued down. They're like, we're not giving you that leg. So yeah, there's 50x 101 million here. So we could come back into these pools. They're starting to thicken up nicely. That's what I'm seeing anyway. Do I have levels like Jason Casper does in terms of creating these like point of controls and stuff like that? I use the fibs and whatnot for my level idea, and they tend to bounce there. So you'll see me doing a lot of trend-based pitch, not pitch fans. I was just showing you pitch fans. Trend-based fib extension levels. So we based off this drop and this retrace here. So a trend-based fib extension uses impulse retrace ideas. So based on how deep the impulse is and how weak the retrace is, widens your math up, right? So you have this wider math if you have a wider impulse. And so if you have a smaller impulse and an equal retrace, then your math is tighter, right? So based off of this impulse retrace idea here, we had an impulse retrace. This projects your C if you're an Elliott wave trader, and this would be your measured move to the downside here at this pool here at 26, which we have yet to see. So that's why we put these different pause points in the charts with these other fib levels, 0.65, 0.706, 786, and we went into the 786 and bounced off that. So you'd naturally expect some sort of like bounce here, and then you can reassess entering a short or just taking the long scalp up. So yeah, in terms of like levels where I'm going to give you entry levels and stuff, that's not how I operate per se, but I do with the Momentum Master and the Momentum Master Ultimate. It will give you these 5 time frames overbought, highly likely to go down ideas with the baseline crossover in confluence is what you're looking for. Just confluence on confluence. These oversold levels plus the baseline crossover gives you that juice to the upside. So we are kind of like a momentum liquidity trader, if we were to put it in terms that you might understand. So if you're new here, that's kind of how we operate. So let's go back in for one last look. As we close, we got 4 minutes before I got to get ready and prepped for futures trading on the NASDAQ. If anyone's in the Momentum Master Discord, we will be streaming that there privately if you want to see some potential setups there. So there, you have these fair value gaps up here that could be recovered, which coincide nicely with the liquidity we lined out for you on these pools up here. So coming up into these pools is not out of the question. You did have a large drop to the downside and a large interest open up from the shorts, which are in profit, which they want them to close. So retrace is in order after a large move like that to the downside. So you could come up fake out and do some more shorts, take out some of the 100x longs, and then continue up into this thing. So that's kind of what I'm seeing here, the shoulder, head, and shoulder idea out of here. The cloud is thinning, suggesting you will see that bounce, which we have gotten. We broke the ATR of the bearish structure. You're seeing the bullish ATR begin. So where would you look for that entry? Well, you would look for that kind of entry, if you were so inclined, off of some support here after a reset of some of the time frames. So the 15-minute comes down after coming up here, and then the hourly starts to give you back some juice, and the 4-hour looks still good to go. Then maybe you can consider that here. But as the message that keeps scrolling on the top says, I'm not a advisor in any way, shape, or form. I'm just playing chart art 2.0. So yeah, that's my story, and I'm sticking to it, folks. So we didn't get that bounce here up to that pool previous. We dropped back down out of here, and how would you have seen that? Well, the baseline did cross over on this candle here, and until you get the cross back up, you're not good to long that. When you see a crossover to the downside, it generally means it will go down for the most part, and you look for that support on the higher time frame. So if you were looking at this on the hourly, back here we weren't really seeing that support in the same fashion. Now it's been given multiple opportunities to break, and it hasn't. So it looks like we're trying to see this attack to the cloud slash ATR of the hourly here. Can it occur? We're getting the volume to step up to the plate to attempt it. We have a minute for this candle to close. We'll just stay for the close of this candle, and then we will see how the stochastic updates on the hourly time frame. And I believe the 4-hour closed already. Yeah, I think it did. Yeah, it closed an hour ago, so we're not going to see any update on that. But basically, the 4-hour crosses over, then you're probably good to go on a 4-hour time frame as well. So waiting in 3 hours for that 4-hour close. So London is going to bring it in about an hour. So we can move this out like 1 more hour here, like that. So London will either bring it up here and drop it down. But generally that's what you see anyway. I'm saying this based on experience. You pierce the cloud and you come back to it. And by that time the cloud kind of curves out a little bit, and then it starts to thin, and then you see if that thinning is to your liking to a move up there or not. So this would be kind of one thing that you see. Ooh, and the cloud updated too. So you see this angle kind of curving, but it's still thick here. So it normally gets rejected on the cloud, and so it could get this hard rejection and come back down out of it, and then kind of play games around in this cloud, and then start to come up to here. But I don't play breakouts, so that's not my style, so I'm not really into the breakout trading thing. So we'd be looking for some support here on the cloud if we can, and then seeing that continuation idea if that is the case. All right, ladies and gentlemen, I got to get ready, so shout out to everyone here, and thank you for your time. Thank you for sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same, bringing the fire, the precision, the accuracy, and all that good stuff. So catch you all right now in the Discord for Momentum Master. So thank you for coming on in, and peace.